Starting May 5th, the United States Department of Education resumed collecting on defaulted student loans. And that means garnishing wages, seizing tax refunds, and withholding Social Security checks from nearly 6 million Americans. If you have a federal student loan in default, this is not something that is coming. It is already happening right now. And I want to make sure you understand exactly what this means for you before it hits your paycheck without any warning. Let me tell you about someone I want you to picture. Her name is Danielle. She is 31 years old, works as a medical assistant in Phoenix, Arizona, and has been carrying $34,000 in federal student loan debt since she left college in 2016. When the pandemic hit, her loans went into a pause along with everyone else. She got used to not making payments. Life moved on. She changed jobs, moved apartments, updated her phone number, and honestly stopped thinking about the loans altogether. Then 2 weeks ago, she looked at her paycheck and something was wrong. The number was lower than it should have been. Not by a few dollars, by several $100s. The government had already started taking money directly from her paycheck, and nobody had warned her it was coming. Her employer had received a legal notice and was required by federal law to comply immediately. Danielle found out the same way millions of Americans are about to find out, by looking at a paycheck that was suddenly much smaller than expected. Danielle is not alone. There are nearly 6 million Americans in the exact same situation right now. And what concerns me most is that the majority of them have absolutely no idea this has already started. Before I go further, this is not financial advice. Everything I share here is for educational purposes only. Please always speak with a licensed financial advisor before making any decisions about your specific situation. I'm here to help you understand what is happening, so you can act on it intelligently. Here are the 3 things you absolutely need to know about this situation. And the third one is the one that most people watching this video are completely missing right now. The first thing you need to know is that the government can legally take up to 15% of your disposable paycheck every single pay period without going to court first. This is called administrative wage garnishment, and it is authorized under the Debt Collection Improvement Act and the Higher Education Act. The Department of Education does not need a judge. It does not need a court order. It simply sends a notice to your employer, and your employer is legally required to start withholding from your very next paycheck. For someone earning $50,000 a year, 15% of their after-tax income comes out to roughly $450 every single month. $450. Let me say that again. $450 automatically taken from your paycheck every month before you ever see it, before you can pay rent with it, before you can buy groceries with it. Over a full year, that is $5,400 gone from your pocket with no court date and no judge involved. That is the number I need you to sit with right now, because that is the real-world impact of what started on May 5th. What concerns me when I look at this is not just the dollar amount, it is the speed. There is no grace period once the notice goes to your employer. There is no time to scramble and figure out what to do. The withholding begins with the very next paycheck after your employer receives the notice. That is how fast this moves, and that is exactly why I want you to take action today and not next week. The action I want you to take right now is to go to studentaid.gov and log in with your FSA ID. Click on your loan details and check your loan status. If any of your loans show the word default, you need to keep watching this video and then act before the end of today. This check takes less than 5 minutes and it will tell you exactly where you stand. There is also something important to know about your job security in all of this. When your employer receives a wage garnishment notice from the Department of Education, they are not allowed to fire you because of it. Federal law under the Consumer Credit Protection Act protects employees from termination based on a single garnishment order. Your employer has no choice but to comply with the garnishment, but they cannot use it as a reason to let you go. That is a protection most people do not know exists, and it is worth knowing before you face an awkward conversation at work. And that brings me directly to the second thing you need to know, because wage garnishment is only one of 3 collection tools the government is currently using. Stay with me. The second thing you need to know is that the government is also seizing tax refunds and withholding Social Security checks, and millions of people are going to discover this the hard way when they file their taxes next year. This happens through the Treasury Offset Program, which is run by the Bureau of the Fiscal Service under the United States Department of the Treasury. Under this program, if you are in default on a federal student loan, the government can intercept your entire federal tax refund before it ever reaches your bank account. Not a portion of it. The entire refund. If you were expecting $2,400 back this year, you may receive nothing. For retirees and Americans on disability, the situation is also very serious. Social Security benefits are not fully protected from this. Up to 15% of your monthly Social Security check can be withheld if you have a defaulted federal student loan. The average Social Security retirement benefit right now is approximately $1,907 per month. 15% of that is $286 every single month, taken from people who are often living on fixed incomes with no flexibility and no backup. $286 per month, every month, from a retired person's primary source of income. There is one important legal protection you should know about here. Federal law does set a floor. If your monthly Social Security benefit is $750 or less, it cannot be garnished at all under the Student Loan Offset Program. That protection exists, and it is worth knowing. But for the majority of recipients whose benefit exceeds that threshold, the risk is real, and it is active right now. Here is the number that really stopped me when I was researching this video. The student loan delinquency rate, meaning borrowers who are 90 days or more behind on payments, is currently sitting at 9.6% of all outstanding balances as of the first quarter of 2026. 9.6%. That is almost 1 in every $10 of student loan debt in serious trouble right now. And that number has been rising steadily since repayments restarted. The pool of people at risk of these collections is enormous, and it is growing. If you want to find out right now whether your tax refund is already flagged for interception, call this number, 1-800-304-3107. That is the Treasury Offset Program hotline. Give them your Social Security number, and they will tell you within minutes whether any of your federal payments are scheduled to be taken. Write that number down, 1-800-304-3107. Now here is the part of this video I need you to pay the closest attention to, because there is a way to stop all of this, and most people have no idea it exists. The third thing you need to know is that you can legally stop these collections almost immediately, and the process is far simpler than the government makes it appear. There are two pathways out of default for federal student loans, and either one stops the wage garnishment and the tax offset the moment you begin. The first pathway is loan rehabilitation. You contact the default resolution group at the Department of Education and agree to make 9 monthly payments over a 10-month period. Here is the part most people do not know. The payment amount is based on your income. For borrowers in genuine financial hardship, that payment can be as low as $5 per month. $5, not $500. $5 a month is enough to enter a rehabilitation agreement. And once you enter that agreement and make your first payment, the Department of Education is required by law to pause all collection activity. The wage garnishment stops. The tax refund offset stops. You do not have to wait until all 9 payments are complete. You just have to start. When you complete all 9 payments, something very significant happens to your credit report. The default notation, the one that has been dragging down your credit score, gets completely removed from your credit file. It is not marked as resolved. It is not listed as paid in full. The default entry is deleted entirely. I do want to be precise here. The record of late payments that occurred before the default will still remain on your credit history. That is separate from the default notation itself. But removing the default status alone is a meaningful and long-lasting benefit to your financial standing. The second pathway is loan consolidation. You apply to consolidate your defaulted loan into a new direct consolidation loan. Once approved, your original defaulted loan is paid off by the new consolidated loan, and it is immediately removed from default status. This stops all collections. Consolidation is faster than rehabilitation. It can be completed in a matter of weeks rather than 10 months. The trade-off is that the default notation remains on your credit history, even after consolidation, whereas rehabilitation removes it entirely. Both options work. The right one depends on your priorities. The action I want you to take right now is to go to myeddebt.ed.gov. That is the Department of Education's official debt resolution website, built specifically for borrowers in default. You can log in, see your exact balance and status, and begin the rehabilitation or consolidation process directly on that site. If you prefer to speak with someone, and for something this important, I think that is a smart move, call 1-800-621-3115. That is the default resolution group. The call is free, the help is free. They are there specifically to walk you through your options. Now here's my honest take on all of this. When I look at what the Department of Education is doing, I understand the reasoning. The federal student loan portfolio is over $1.6 trillion, and default rates have been climbing since repayment restarted. Collecting on these debts is a legitimate function of the system. I am not going to pretend otherwise. But what I cannot look past is how poorly this restart was communicated to borrowers. Millions of people had their contact information go stale during the 3-year payment pause. People moved. People changed email addresses and phone numbers. The legal notices went out, but they went to old addresses and outdated contact information. And for millions of borrowers, the first real notification they received was seeing a smaller number on their paycheck. That is a failure of communication, and real people are paying the price for it right now. Here is what I would personally do starting today. First, Go to studentaid.gov right now and check your loan status. Do not assume you are fine. Log in and look at the status field for every loan in your account. This is your starting point for everything else, and it takes 5 minutes. Second, call 1-800-621-3115 and ask to speak with the Default Resolution Group. Tell them you want to understand your options for resolving your default and stopping any active collection. They will pull up your account and walk you through exactly what applies to your situation. Third, ask specifically about income-driven rehabilitation. Depending on your income and family size, this is the option that may bring your monthly rehabilitation payment down to $0 per month. Zero. You can be in an active rehabilitation agreement, with all garnishments stopped, while making a $0 monthly payment if your income qualifies under the formula. That option exists, it is legal, and most people in default have never been told about it. Fourth, if wages are already being withheld from your paycheck, request an administrative hearing immediately. Under federal law, you have the right to dispute the garnishment. You have 30 days from the date on the garnishment notice, not from the day you discovered it. These are two very different things. If you only just learned about this today, check the date printed on that notice right now. That window may still be open, and if it is, use it today without delay. Fifth, visit consumerfinance.gov and file a complaint through the Consumer Financial Protection Bureau if you believe your rights were violated during the collections process. For example, if you never received proper notice before garnishment began. The CFPB takes these complaints seriously, and filing one is completely free. The people who take action today will be in a completely different position than the people who wait. That is not an opinion. That is the pattern I have seen play out every single time a major collections program restarts after a long pause. Here is what I want you to walk away with. The government started garnishing wages, seizing tax refunds, and withholding Social Security checks from 6 million Americans on May 5th. They can take 15% of your disposable income without a court order. They can take your entire tax refund. They can reduce your Social Security check, unless your benefit falls at or below the $750 monthly protection threshold. But you have two clear legal pathways out: rehabilitation and consolidation, and starting either one stops collections almost immediately. Go to studentaid.gov to check your status. Go to myeddebt.ed.gov to start the process, or call 1-800-621-3115 right now. If this video gave you even one thing you did not know before, please subscribe. I put out videos every single week breaking down the financial news that actually affects your wallet, your family, and your future. No fluff, no filler, just the stuff that matters. And in my next video, I am covering Social Security, what a 24% automatic benefit cut looks like in real dollars, and what you can do right now to prepare. You will not want to miss that one. I also want to take a moment to address something I hear from a lot of people when this topic comes up. Many borrowers feel embarrassed about being in default. They feel like they made a bad decision or failed somehow, and that shame keeps them from picking up the phone and asking for help. I want to be direct with you about this. The student loan system in this country is genuinely complicated. Repayment plans changed multiple times over the years. Forgiveness programs were announced and then reversed. Interest capitalized in ways that made balances grow even when people were making payments. A lot of borrowers who ended up in default were not irresponsible. They were confused, overwhelmed, and dealing with a system that was not designed to be easy to navigate. If that describes you, I want you to hear this clearly. You have nothing to be ashamed of, and you have every reason to make that call. One final thing, and this is specifically for people who are not currently in default, but who are struggling to make payments right now. If you are behind but not yet in default, you still have time to prevent all of this from happening to you. Income-driven repayment plans, available through studentaid.gov, cap your monthly payment based on a percentage of your income. For many borrowers, that brings the payment down to a very manageable number, and some borrowers qualify for a payment of $0 per month while remaining in good standing on their loans. Your loans stay current, collections never start, and you preserve every option you have for the future, including loan forgiveness programs that require good standing to qualify. If that is your situation, go to studentaid.gov right now and apply for an income-driven repayment plan today. Do not wait until you cross into default, because once you are there, the options become narrower and the consequences become immediate. Knowledge is your greatest asset. Use it today.